Why won't financial advisors talk about self-directed IRAs? Well, that's today's episode. Let's dive into it. Here we are at our very first rental property. Hey everyone, I'm Clayton Morris.
I'm Natalie Morris.
And this is the channel where we help you build financial intelligence so that you can build financial freedom. And we're going to talk about self-directed IRAs, which I think we believe is one of the most powerful wealth building tools at your disposal, right?
It is a powerful wealth building tool. Exactly right.
Tax-free wealth. I mean, look, you put money into this thing. When you take it out, your tenant's paying rent in this vehicle. You're making all kinds of money, and then you don't have to pay taxes on it when you take it out.
Well, that's if you're getting into the distinction between a traditional and a Roth, yes. But we're just talking about an IRA in general. And what's an IRA is a retirement account, right? Individual retirement account that the government will put some kind of favorable taxation, either on the beginning or the end, right? And it's a vehicle for you to invest for your retirement. Now, the rules around an IRA are pretty strict. You are not allowed to use it for anything to live your life right now until you hit a retirement age, which I believe is 59 and a half. So we're in our 40s. We have IRAs. We cannot use them to buy a boat or buy groceries or send our kids to golf lessons, right? We're not allowed to use that money to do that. But we can have some sort of arm's length type investment, like stock market investment or real estate, right? Now, most people get an IRA and they put it in one of the traditional custodian banks like Scottrade or E-Trade or Fidelity or what have you. And then they, in turn, will have those in the stock market, some kind of mutual fund or stock fund, right? But you also have an option to have it with a custodian that allows you to invest in other non-stock based accounts at your discretion. But most people don't know that.
Right. Most people don't know that. And that's part of the education process while you're watching this channel. And if you book a call with our team at Morris Invest, there's a link below. We'll kind of walk you through that process. We'll have a number of phone calls with you to walk you through this process of self-direction and really understand if it's a good fit for you. But most financial advisors won't talk about it. And we have a video here on the channel where we interviewed a financial advisor who's a real estate investor. And he said the reason that financial advisors won't talk about real estate investing inside of a self-directed account is because they don't make money off of it. That's the bottom line. They could refer you to some real estate based stocks like REITs, where you don't actually own the real estate. You own a share of a fund that owns real estate. So you don't actually get a deed to a property. You don't get any of the tax benefits of owning real estate that way. You simply own a stock.
Well, I think it's important also to think about what we're talking about by financial advisor, right? So there's a financial advisor who just manages your portfolio at a bank or a stock-based bank, right? Like Fidelity. That's just the person who watches your funds and makes some suggestions for you to maybe buy different kinds of funds. And they may or may not make a commission on when you buy those things, right? And so a lot of times financial advisor, is a term for just like portfolio manager, right? We have in the past hired financial advisors that are not fiduciaries, meaning they don't make money on whether or not we make money. They're just going to give their advice, and then we have to go off and implement it. Mm-hmm. And they're not going to make money on the trades, the buys or the sells. That's something completely different. But that type of financial advisor usually also doesn't tell you about these, I want to call them like more empowered choices,
right,
where you can then control what's happening inside of your retirement accounts. One, because it's not common. Two, because they don't make money on those things. And I don't know if I had a third reason. I thought I did when I started counting to three, but now I don't.
Remember the governor during that one political debate?
It was like, Rick Perry.
Rick Perry's, I'm going to shut down three
government agencies. And the third one, I mean, he had already publicized it, so we all knew the third.
But we all do that. I think we all get to that third. We're like, what is that?
It's just
third?
Very satisfying to say you have three reasons for something, whether you do or not.
Well, it's like 3 acts of a play, right?
I give my children till the count of 3.
Right. So, no, and it's a good point. But so the power of the power of self-direction. I mean, we teach it here on the channel. We've got a whole series that you could watch on self-direction and why it's so powerful. Now, imagine owning a piece of property, a piece of real estate, an actual property. And like our company, we do a lot of new construction, right? So doing new construction property that you could buy inside of a self-directed account. And think about that power of having that new construction property with a tenant, cash flowing, fully billed inside of a self-directed account. Now you make that purchase, that cash that you're making from that tenant is also going in at tax-free inside of that account. So that you'll be able to take that money out, when you're retirement
that's
age.
only if you have a Roth. If you have a
Right.
traditional IRA and that tenant pays you $1,000 a month, by the time you're 59, you're going to withdraw and pay taxes when you're 59.
Right, we want to have a
If you
Roth.
have a Roth, then yes, you are going to pay taxes on whatever you put into it.
Right.
But then the tenant is going to pay you for the rest of your life. And when you withdraw it, you will not pay tax on the withdrawal. That's why we always really advise you to think really hard about the Roth versus the traditional. Because hopefully by the time you're ready to use that money, you're in a higher tax bracket because you've made awesome choices with your money, right? Okay, we have entire podcasts about that. We won't go too far down that rabbit hole. But we just want to let you know that when you have a self-directed IRA versus a traditional, right? The company that is your then custodian that allows you to have your money parked inside of their house and then go out and buy a house or whatever it is you're going to invest in, that company makes money usually on the transactions. Like when, for instance, we have a house 123 Main Street in Clayton's IRA, and then we get a tax bill, right? We have to pay the tax bill out of the IRA. The IRA is going to charge like a $10 fee to send a check to the city, or charge like a $15 fee to send a wire to the insurance company. So they make money on transactions. It's usually pretty nominal. And in my opinion, it's reasonable. But they don't make money like when I then sell that property for a gain. They'll make money again on like signing the escrow papers or sending out money or
Right.
receiving money. But I could make $1 million on that transaction, and that would not affect them. The same is not true if I buy a penny stock, sell it for $1 million. The custodial will make money on that, right? That's very different. So there's just not as many people out there making money on this. And also, again, it's a non-traditional way of investing because you are so empowered. You reap the benefits of your risk, right? And so there's not a lot of people who are going to say, you should consider this, even though there is us saying, you should consider this.
Yes, it's an incredibly powerful tool for wealth building. And one thing I'll also say is you're up against money here. So the reason you probably don't hear about this is because you are up against a wall with money, meaning you're going to watch a Super Bowl commercial and somebody investing in real estate with a self-directed account, you're not going to see a Super Bowl commercial for that because there's no middleman.
There's not enough money for, Super Bowl advertising.
No, but if you're
that
Fidelity or you're,
right.
and I'm not here to crap talk any of these companies, but they'll run these big ads in these big, World Series and Super Bowl, follow the green line to retirement, or, get on this boat of retirement. We'll manage your money. And they have all these characters that they're paying these actors, and they're spending millions of dollars on this advertising.
Because it's extremely profitable for them when you do just that.
Right. So when
Not
you trade
necessarily for
stocks,
you.
when you work with them, they make a ton of money off of your portfolio. And so that's what we're trying to teach you here is that if you're seeing these commercials and we're going to work on your retirement with you. We're going to take care of you. That's what you're up against. So you're not going to see advertising for what we're telling you about here, which is a really powerful wealth building tool that enables you to buy real estate or other assets
Right.
inside of a self-directed account. And if you do it the right way, hopefully you're buying it with a Roth account so that when you retire, you're not having to pay tax on that.
Right. Yeah.
So-
I mean, I think it's such a rare thing where someone can just hand over some money to someone who knows something and that person makes money for them. What we try to teach you here is how to become a real estate investor so that you are in charge of your own money and your own investments. It's you in the driver's seat, not somebody else. So I think, that's why this type of financial advisory is rare because I don't think that's all that successful. You got to be in charge. It's got to be yours.
Right.
It's got to be yours to manage and think about and study and make decisions, That's why, I mean, who would be this far into this kind of YouTube video and be like, no, I want someone else to do it for me?
Well, I mean, I think a lot of people want other people to do things for them. That's why the 401k is so successful.
Right, but I'm just talking about the kind of avatar that's gotten
Right.
this far into programming,
I gotcha.
and then they're like, oh, this is not for me. I want things done for me.
Yeah, and
That's
by the
not
way,
you.
and when I say the 401k is successful, I don't mean that it is actually successful. In fact, all the data shows it's a pretty terrible retirement vehicle. And I've got shows on this specifically that are coming out on the 401k, and I can't wait to tell you about it. But I'm just talking about the 401k as a vehicle has been so promoted. And in fact, companies actually get incentives if they make it automatic when you start working for them. So if you start working for a company, the banks that they work with are now even rewarding the companies for making it automatic. So you have no choice. But when you start, it defaults to a 401k.
You're on a tangent. Yes,
I know I'm on a
you're
tangent, but that's what I'm saying. So
Okay.
these are the things you're up against. These sort of set it and forget it. I don't need to care about my finance. Oh, my company's going to take care of it for me and I can go out to the bowling alley with my friends on a Friday night. No, you need to be in charge of your finances. You need to build financial intelligence. That's what this channel is all about. Hit the subscribe button. Hit the little bell dingus too, which is right there, because then that'll notify you when a new video goes live. And by the way, we do a live show once a week as well. Thank you guys so much for joining us. We'll see you next time right here on the show.